Hey everybody, thanks for joining me. I've said before that small cap stocks could be one of the best opportunities in the market right now. I believe that more now than I did at the beginning of the year because small caps have outperformed or underperformed the large cap stocks so far this year already. I'm going to get into some of my favorite small cap ETFs in just a minute. Before we do, take a minute, click subscribe, and check out the link you see on your screen, fool.com/Frankel, for a special offer from my sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it's the best way to support this work I'm doing on YouTube. Again, the link is fool.com/Frankel. So, without further delay, let's get into some of these ETFs. The first one we're going to talk about is the Vanguard Russell 2000 ETF, which in my mind is like the basic small cap ETF to buy. The Russell 2000 is widely considered to be the small cap index. If you look at the top of CNBC, for example, it's listed there right along with the S&P 500, Dow Jones, and NASDAQ as kind of the fourth major index up there. Ticker symbol for this one is VTWO. It's a Vanguard index fund, so it shouldn't really, surprise you that it's a low-cost index fund. It has a 0.1% expense ratio, which means for every $1,000 you have invested in the fund, your annual expenses are just $1. So you get to keep most of your gains over the long term. Pays a decent dividend, about 1.3% yield at the moment, 9.4% asset or $9.4 billion of assets under management. And this next point is kind of why small caps are so attractive right now. The average PE ratio of a Russell 2000 stock is about 15.5 right now. That's well under the S&P 500. And the last time that small caps had such a valuation disconnect to large caps was back in 1999, 25 years ago. And it preceded a long period of small cap outperformance. Small caps are very, very cheap right now relative to the rest of the market. And this is just a great way to play it. There are some big catalysts that could help small caps really outperform over the next couple of years in particular. Um, Falling interest rates is one. Just general economic strength is another. If we can avoid a recession, that would be a big catalyst. Um, Very diverse index fund, as you would imagine, with 2,000 different companies in it. Uh, Almost every stock is under 0.5% of the total index, even though this is a weighted index. The only time one gets above that is if a stock that is a Russell 2000 stock really just kind of explodes and is really expensive for a little while. You'll see that weighting go up. But beyond that, the second one I wanted to talk about is probably my favorite of the three. This is the Vanguard Small Cap Value ETF. Ticker symbol is VBR. As you can see, a very popular index fund, almost $53 billion of assets under management. Even lower expense ratio than the first one, 0.07%. It pays a 2% dividend yield, a little higher because value stocks are more likely to pay dividends than growth stocks. This is an index fund that tracks the value portion of the small cap index. It has it has fewer stocks than the Russell 2000 because it excludes the growth stocks. But value stocks are also having a valuation disconnect with growth stocks right now. So not only are small caps relatively cheap compared to large caps, but value stocks are relatively cheap compared to growth stocks. So this kind of combines two different value disconnects. You can see the average PE of a stock in this index is just 13.7. That's very low. And not only is the valuation low, but these companies are doing well. They have an average earnings growth rate of about 12.5%, which makes this a really attractive value play right now, especially with that growth rate right there. So out of the three, this is probably my favorite one right now. I'm a big fan of kind of long-term value disconnect, especially when it comes to my ETF investing. So you can kind of take advantage without having to do the guesswork of investing in individual stocks. So third, and last but not least, the iShares Core S&P Small Cap ETF. This is an S&P 600 ETF. There are two major small cap indices. There's the Russell 2000, and then there is the S&P Small Cap 600. The Russell is generally broken into two parts. You have the Russell 1000, which are larger companies, the Russell 2000, which are smaller companies. Then there's the Russell 3000, which is kind of the broad market index. When it comes to the S&P index system, there are three major indices. There is the S&P 500, which are the 500 largest U.S. companies. It's the large cap index. There's the S&P Mid Cap 400, which is companies that are kind of in the middle market cap wise. Then you have the S&P 600, which is the small cap index. Put those three together and you get the S&P 1500, which is kind of a broad market index. So this is the S&P version of the small cap index, similar to the Vanguard in nature, a little less diversified because obviously 600 companies instead of 2,000, but very low expense ratio. This is the cheapest of the three to invest in, so you get to keep the most of your gains. About $77 billion of assets under management. So this is the biggest small cap ETF in the market, and it could be really worth a look if you just want to index small caps and just kind of set it and forget it. So as I mentioned, small caps are in kind of a big value disconnect relative to larger caps right now. At the beginning of 2024, one of my favorite analysts, Fundstrat's Tom Lee, pointed out that small caps were kind of a loaded spring, if you will, and that their price to book value was at a lower level relative to small caps than in many, many years. I mentioned 25 years ago. And last time that happened, it led to small caps outperforming pretty significantly over the next decade or so. No guarantee that past performance will be indicative of future results. It's entirely possible that even though there's that valuation disconnect, that large caps could still outperform. And in fact, we've seen that so far this year. So no guarantee of when the timing could happen, when that valuation gap could start to narrow, or even if it will. For all we know, the mega caps will continue to outperform, and things like that. So keep that in mind. I'd love to hear which of the three are your favorite, what you think about just small caps in general at this time. So please leave me any comments you might have. I'll do my absolute best to get to each one of your comments or questions individually. Again, let me know what you think about these three ETFs, or if you have any other favorites in mind to play the small cap kind of valuation gap right now, because I do think it is a big opportunity, and I look forward to seeing you again very soon. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.